So you mentioned uh, a lot of index funds, obviously, and then I go based off your investments. Obviously, you're very much index heavy, right? How do
Mhm.
you decide what index funds to invest in? How did you, at least at the start? How often do you change that up? And I'll start with that.
So Vanguard, I just honestly, I think I'm still in their target fund, but I do need to switch that over for work. Um, since I don't think VTSAX is an option, it's an amalgamation of large cap US, mid cap US, and small cap. So you have to buy three different indexes to mirror the whole market, and I just buy them in equal amounts. Um, the HSA isn't all large cap though. That's my YOLO fund because it's the one that I put the least amount of money in, and it'll probably get the best return. The 401k is where I have the most amount of money in, and that one is pretty evenly divided. I don't think I have any bonds on that one. If I do, it's about 10% US bonds, like US Treasury bonds.
Hmm.
And I am pretty heavily invested in foreign markets. So foreign market index fund is another thing that I'm doing just to avoid home territory bias. So especially with what's going on in the market right now, I'm kind of not okay with it. So I don't want to be the next Japan, right? Japan stock market hits all-time high, crashes, never recovers. Like that is
Hmm.
something that is possible to happen.
Yeah.
Um,
How long ago did that happen with Japan?
not sure.
Yeah, yeah, yeah. I was just
I,
like, I didn't know too much about Japan's stock market crash and how they've been unable to recover. So that's just new.
yeah, it was just I mean they didn't recover because it was unsustainable, right? So it's not I'm sure they recovered somewhat, but not the typical recovery, which is an upward slope. Um, so that might happen in the US. So I'm trying to avoid home country bias and got 35% or 30% of the portfolio in foreign index funds, and that's where I put my money.
Yeah,
Just and the
yeah.
reason I do it is because statistics. I think I've mentioned this a couple of times, right? So um, look at ROI for college, look at good job opportunity, and just look at what the numbers tell you. And the reason I don't gamble and I don't pick stocks is because a ton of people last year were saying, I've made, 200% of my portfolio. I bought Disney and Carnival and whatever. And I was like, all right, now do that again for 40 years. Keep playing
Right,
your game for
right.
40 years, which is the retirement horizon, and let's see who wins.
Yeah.
Congrats. I did think about it. I did think about, investing in those blue chip stocks when the market went down in March and I was staring at it. I was like, the cruise ships aren't going to go anywhere. Even if Royal Caribbean goes bankrupt, the ships are going to go somewhere and someone's going to take over the company, right?
Yep.
Same with Spirit, same with whoever else. Like the company will continue. And I didn't do it. I
Yeah.
just because I don't gamble.
Do you ever go in and ever I get you said you're in your target date fund for your Vanguard or for
Mhm.
your things. Do you ever go in? I assume if you're only in one fund, you never really need to rebalance because it's all 100% that fund. Um,
Yeah.
have you ever needed to go in and actually change anything from those since you started?
Yeah. So I think for the 401k, I was in a target fund and it had really high expense ratios. So I don't know, 2, 3 years ago, I had to go in and figure out index fund options that we had. And yeah, so I had to, for the 401k, it's very limited.
Was
And I
the
think we're in like Fidelity version of index funds that have higher expense ratios, which I'm annoyed about, but what can I do?
were the target dates your like the default ones they put you into immediately?
2060, 40
Yeah.
years or so, yeah.
Yeah, yeah, yeah. So like you basically like they gave you like when you put your money when you signed up with them through the company they and you had your meetings with them, they just automatically defaulted you to your target date funds.
Yeah,
And
and be careful with those. Those have high expense ratios, and
right,
expense ratios are killer.
yeah.
Um,
Even if it's just like,
that
quarter percent, whatever percentage it might be, like again, percents, quarter percent, but again, over a lifetime, right? It adds up.
yeah, so I think I did this with my friend the other day because they were trying to tell me something about like an impact fund, which is basically an index fund, but you take out away all the companies that, sell weapons and like
Mm.
do terrible things.
It was like
And I
a
was just kind of,
you go.
yeah, no. It's just kind of like, what's the return on that? It was like, oh, it's like a quarter to 0.5% less than the regular market. And I was like, I'm sorry, I'm sticking with the whole
Cause
market.
yeah,
Like,
yeah. It's one of those that you'll invest in again if people hold like very strong beliefs on one of them, sure. Like again, it's just one of those that you justify. I don't specifically. I know that some places like Wealthfront Betterment and other robo like people offer like green funds or funds that are again very much
mhm.
like cause-based funds that will avoid certain organizations or certain companies for sure. But yeah, it's definitely interesting to look at those average returns over time and also specifically again the expense ratios to make sure that you know like again unless you value you really believe very strongly in each of these causes, like it just that value conversation is very personal. Uh, you know.
I I I empathize with people that want to make a statement that way, and I just logically ask them, do they pay taxes? They don't get a choice where their taxes go, and a lot of it goes to war and destruction anyway. So, if I'm going to be morally gray by paying taxes, I might as well get that quarter and 0.5% return on my investment. Am I buying their stock directly? No. But am I going to go out of my way to avoid them? I'm not doing that either.
Yeah, and you are living in Florida, so you don't have that other, huge tax of based off the income or the state tax. So at least there's that. Um, but whereas us
That
in
is a choice.
yeah, yeah, versus us in
That's a choice I
California,
made.
yeah, versus us in California, they're just like, all right, well there goes like a huge percentage of my income based for taxes.